Welcome back to another Bitcoin update. Now, since it has been less than 24 hours since my last video, I'm not going to update the monthly or weekly timeframes because, well, nothing's changed. On the daily time frame, you can see we have not managed to get that close above the 50-day TMA that I was hoping we would get for a more bullish scenario. We have actually printed a rather ugly looking candle where we've gotten a decent amount of volume, but price has been unable to close above either the 50 TMA or this diagonal downtrend line since we got our fifth time breakdown, I guess you could argue. And now we have just gotten the daily bar low broken, which has turned the daily swing down. Now, obviously, being a slightly more lagging indicator, the stochastic RSI and the BX trender are still bullish, you can see, but obviously as a much more lagging indicator than swings alone, we probably won't get confirmation of a downswing unless we get a really ugly capitulation bar. Now, if you're in a short position, it probably isn't that ugly. And speaking of short positions, if we do close today's candle underneath the 50-day TMA, which is currently at around $69,400, that would be 3 daily closes under the 50-day TMA with a swing direction change, which is going to be enough for me to heavily load up on shorts. And I do believe if we start to sell off a bit more this week, like if we manage to get price action underneath $67,600, then we will probably also turn the weekly BX trender dark green, and we'll start to form lower highs. Now, on this 4-hour time frame, you can see my Elliott wave structure for now is currently still not invalidated because we haven't even broken $68,000. And I said if we get wicks into the $67,000 region, that is, I guess, still okay, provided we can get a nice strong recovery out of it and we can get a decent wave 3 going. Now, on this 15-minute time frame, you can see this ABC pattern that I was predicting. I guess you could argue it sort of played out, and potentially, because we have now exceeded the low of that wave C, it is very likely that we've formed a more complex corrective pattern rather than just a simple ABC. Now, obviously, I'm not going to go through and bore you with WXY corrective patterns and such, especially on a 15-minute time frame. It's pretty pointless. But you can see we're now 7 bars down on the 15-minute chart, and we've gotten this pretty ugly looking flush out bar after we retested the 33 fair value band and the 50-hour moving average from the underside. Now, it's never a great sign when you see price rally into a moving average line or market bias, bull market support band, whatever, and sharply sell off, because typically I found in my backtesting that means the -1 standard deviation band will likely get hit in the next few candles. And in this case, the -1 band, even if it does get hit, because it's still above $67,000, I would still give some hope to a bullish scenario. So all is definitely not lost. This could very well be just a shakeout before we get another leg higher, because Elliott wave structure is intact, the 4th time breakout is still intact, and if I draw a little fib retracement here, whoops, not off there, off the actual 9-bar upswing, so if I pull that to 70,378, close enough, you can see if I zoom in, we are now underneath the 50% level, but provided that we manage to hold either the 618, 786, or 826 fib level, I would still be pretty happy. Because even if we come down to the smart money zone, that lines up pretty well with this previous swing high. So we know that old tops can become new bottoms. Now, obviously for a stronger market, you'd want to see us hold above the 50% level to increase the chance that we'll get a stronger wave 3 out of this. But if that doesn't happen, what could end up happening if the market is weak, this wave 1 could end up being our strongest wave, and then we get a weak wave 3. And if this wave 2 correction ends up being quite a savage sell-off, we might end up with just a sideways wave 4 rather than a steep sell-off. And this wave 5 could end up being very, very weak. So if something like this played out, we would still hit close to that $72,000 target level, which is still the monthly max pain level. Not much has changed since yesterday's video. So yeah, that's pretty much it for today. I'm obviously keeping both the bullish and bearish scenarios in mind, and we'll just have to see how price reacts to this $68,000 level, and if we do breach it, we'll definitely need to look towards that 67,600-ish level, and probably 67,200 to $67,000 at the absolute lowest. Now, if you're more of a longer term trader and you're not worried about the 4 hour, 1 hour, and 15-minute timeframes like I am, just wait and see how the daily BX trender plays out. And if we get any bearish divergences or bearish crosses on the stochastic RSI, and of course, if we do get that third successive daily close underneath the 50-day TMA. Now, one could argue that because this Sunday candle didn't actually touch the 50-day TMA, we would start counting from the Monday candle, in which case we'd have to see how this Wednesday candle plays out as well, because that would be 1, 2, 3, before deciding whether we're going to go long or short. Anyways, I will probably push out a daily video, at least for the next few days, maybe even twice a day, depending on how interesting the market gets, just because I think we are on the verge of a major move for Bitcoin. And I definitely don't want to miss it, and want to share my analysis, of course. Anyways, good night.